Hello, everyone. My name is May Reyes of Reyes Group Australia, Accounting and Taxations. I'm here to discuss to you about the negative gearing and why I am telling you that it's actually not good if you are doing an investment and you're just chasing negative gearing so that you could save money or you could save a lot of money on your taxes. So if you could see my screen, this is the scenario. So let's say you actually have a salary of 120,000. And then this is basically on the computations. If you go to the website paycalculator.com.au, you could actually have an idea of how much will be the tax. So I'm computing this tax based on financial year 2023. So in this scenario, you're having an income of 120,000. Your tax will be 31,867. And I'm giving you a scenario 1 as a scenario 2, where it shows in here that your salary becomes 115,000 because you have a 5,000 negatively geared. And then your taxable income goes down to 110. It is because you spend this time at 10,000 because of your negatively geared. So what happened in these scenarios, you could see from 115,000, your tax become 30,142. And on scenario 2, your incomes becomes 110 because you have a negatively geared of 10,000. And this time, your tax goes down by 26,217. As you could see in here, as your income goes down, your taxes also goes down. That's great, right? That's what basically what most people publicize, that negatively geared is good because it actually reduces your taxes. But hang on, as you could also see in here, the tax rate is just basically the percentage between your salary and the taxes that you paid. And this is the amount of money that you actually spend in your investment. So probably you spend more money on the bank interest. So if that is the case, you are paying more, right? And that's basically a cash outflow from your investment. Or suddenly your investment needs repairs and you actually spend up to 10,000 just for that repairs. So there's, a cash outflow of another 10,000. Like in this case. So you could see in here the savings on the taxes. So yes, you got 1,725 savings, and that is because of these two. So this is now your tax, right? This is your actual tax, and because you spend 10,000 or you have a negatively geared of 5,000, your tax is now gone to 30,142. And that gives you a tax savings of 1,725. And the same thing goes here. If you spend 10,000 due to negatively geared, you actually have a tax savings of, wow, 5,650. That is from this. This is your actual tax. And this become your tax now because your income or your taxable income was reduced by 10,000. So that's the scenario. But at the bottom line here, this is the actual money that you spend. This is the cash flow out of your own investment property. And this is your tax savings. And you could see the difference. 5,000 you spend, you save 1,725, you still have a lost. This is a money wasted. 3,275 kaput, gone. So as you can see in this scenario, negatively geared is not good. Unlike most other people that you see, oh, buy investment property, even though it's negatively geared, it's still good. You could save money on taxes. Please don't get into that trap. That's not really a very good and wise advice. Speak to the expert like me. I'm the tax accountant, and I could actually tell you now in this scenario, this is what happened if you have a negatively geared investment property. The only advice that I could give to you is if you have a negatively geared property, if that only falls under the bracket of the depreciations. As you could see, depreciation is an imaginary expense. It's a eligible deductions, but there's no cash outflow. So that's the only way that negatively geared is good if it only falls on the bracket of the depreciation. And more than that, if you spend more than on repairs and maintenance, or you evict your tenants and you paid more with legal costs and things like that, you actually put, extra aircon, repair the roofs, interest is rising. So those are all cash outflow. And that is not a good way that you could say that that's not a good way. You could actually have a negatively geared. So because that's an actual cash outflow from your investment property. I hope in this simple scenario, I could give you an idea the importance of the cash outflow and the non-cash outflow, which is the depreciations. And in this scenario, I could give you a clear insight what negatively geared is about. And negatively geared, as you can see in this scenario, is not good. So take my advice on it. Otherwise, you could speak to me for your own personal situations of how can I actually show you if the investment property that you are dealing and buying is good for you. Thank you for your time. Again, this is May Reyes of Reyes Group Australia, Accounting and Taxations. We love numbers, so you don't have to. Thank you. Bye now.